And let's go to mailbag item number 4. This one, a horse of a different color. This comes from Brett Wham, writing in from Flagstaff, Arizona. And Andy, you just got to love the last name, the surname Wham.
Love that. I just
Wham.
love that. That is fantastic.
I wish I were David Wham. And you should be
if I
Andy
was
Wham.
Andy Wham,
we can all be the Wham brothers.
I would be much cooler if I was a Wham brother.
Well, Brett is, in fact, a Wham bro. So let's kick it off. Hello, David. I'm new to investing in anything outside of a retirement account. I've recently discovered the Rule Breaker Investing podcast. I've become more interested in learning about investing in stocks and plan to start with some, quotes, fun money, as my wife and I are in our 30s and have been fortunate enough to max out our 401ks and Roth IRAs for a few years now. We have no debt and look forward to an early retirement sometime in our 50s. I'm not a Rule Breakers member yet since I'm starting out pretty small. Don't want investment fees to eat too much in my capital just yet. Dropping hints to my wife for an early Christmas membership gift. Our gifts are generally romantic like that, Brett confides. All right. I enjoy reading full articles, listening to your podcast, as it's in line with a lot of my investment beliefs, such as investing in a business that you know and for the long term. As I try and do research on companies I'd like to invest in, I'm finding, Brett writes, that many of them privately held. Is there a good resource out there to compile and track these privately held companies to know when they might have an IPO? Brett goes on a little bit more, but he's basically saying he's keeping a list of private companies. It becomes harder to know if an IPO is coming for any of them. He Googles some of these, sometimes quite frequently, to see if they might be coming public. This is a guy who's wondering, with his Robinhood account, which he mentions later in the note, where he's getting free trades, he's wondering, will that exciting new private company be coming public anytime soon? So is there a resource, Andy Cross, that you use or that we use that you'd recommend to listeners, a helpful way to track private companies?
So, Brett, first of all, congratulations. Not only do you have a cool last name, but congratulations on just getting started with investing and with the Rule Breaker style. Fantastic, especially with someone who's in your age bracket. You have many, many years of investing ahead of you, and long-term, patient, business-focused, innovative investing is the way to go. So just wanted to say that. Congratulations on that, Brett. Second of all, the IPO market, David, has shifted and improved so dramatically over the 20 years that I've been investing 22 years now, last week, investing alongside you here at the Motley Fool. And there's a lot more information. Historically, it used to be very difficult for individual investors to invest in IPOs. And when we say IPOs, by the way, initial public offering, for those who are not used to that acronym, it is for private companies that are issuing stock into the public markets.
When a new common stock is born, something you and I can buy on the New York Stock Exchange or the NASDAQ.
That's exactly right. And
IPOs.
And over the years, we've invested in many, many, many IPOs that have gone on to produce great returns for public market investors.
And some bad ones too. I've
and some bad. Oh, I certainly have too, David.
Too early and hard on Great Wolf Resorts. I remember that one. But keep going, Andy.
Yeah. So. The market is now so much better for finding information. I talked to Aaron Bush, who's an analyst with us here at the Motley Fool, a fantastic analyst and researcher, and he pointed me to a few resources that I want to share with Brett. So the first one is clickipo.com, mobile-first, friendly application that helps regular individual investors not just learn about IPOs and businesses that are setting up for an initial public offering, but actually invest in them, because their application, their online app, ties directly into mini brokerage accounts. It's really fascinating. So in that application, you can sign up for it free. You can find out about companies that are preparing in the registration process to go public, and you can track the information that Brett may be looking for. Now, full disclosure, I have not used it, and so I can't comment on how simple it is to actually use, but the process seems very elegant, and the application is very cool at clickipo.com, and it's free to buy shares, David, and to buy shares in the offering if you can get them, and it's not guaranteed you can, but if you can get them, and the underwriter of the stock actually pays Click IPO for the service. So that's one service that I would certainly suggest Brett check out, is clickipo.com. And by the way, I will just say, Brett, you don't have to invest in IPOs. There are plenty of fantastically great businesses out there in the public markets that are already public, because IPO investing does come with its risks.
That's
David.
right, Andy. And in fact, I've never personally bought an IPO. That is, I've never been invested in a private company that came public. The only stocks I've ever owned or recommended in our services were companies that were already public. Now, some of them were recently public, so you'd say, that was a recent IPO, but none of us here at the Motley Fool, for the most part, or our services, are giving advice to people to get them into stocks that are going to IPO.
And yes, David, we are not, because even in today's market, it's not guaranteed that you can get shares. It's a little bit still opaque when you buy. You don't tend to, even on Click IPO, you don't buy shares. You actually put in a dollar amount, and they try to allocate accordingly, and there are restrictions and eligibility requirements. And once a stock goes public, there's a lot of things that affects that stock price over the course of a year, including lockup periods from insiders.
Yeah.
So it's a little bit tricky, and I'm not, for a beginner investor like Brett, I personally wouldn't necessarily recommend something along those lines for a starting investor, because you can invest in so many great, innovative companies that are already in the public market.
That's right. Andy, I think about here in 2018, remember this IPO? Spotify.
Yes.
I mean, it's a big, well-known company. A lot of people excited about it. It came public. Stock did pretty well initially. It rose, even though this is still a company not making money, but it is a global brand and a big-time business. But these days, months and months later now, it's right back to about the price where it IPO'd. It kind of sold off, and that often happens with these IPOs. They get hyped up. People get excited about them the first few weeks of the first month or first day.
That's right.
But 6 months later, a lot of times they're just kind of back to where they were.
That's true, and so I think the advice I would give to anyone who is looking to get into IPOs, while this Click IPO and there's other Renaissance Capital, Aaron pointing me to, and Strictly VC, other services that provide a lot of information around IPOs and a lot of insights and education on the businesses, but really investing in public businesses that are run by visionary founders that are providing services that are unique in the marketplace and growing exceptionally and have lots of market opportunity ahead of them, you might avoid some of the even more volatile nature that will come with IPOs. So generally, I think, Brett, fantastic that you're getting invested. Don't feel like you have to go invest in IPOs. You might not even be able to because of some of the eligibility requirements. But generally, you don't have to do it because of the great businesses that are already in the public markets today.
All right. And Andy, I think we're out of time for this one. Were there any other resources that you have to check out private companies or anything else you want to mention?
I'll mention, so Renaissance Capital at Renaissance Capital, and Strictly VC, which is actually a newsletter published for free, a daily newsletter published by the Silicon Valley editor of TechCrunch, provides a lot of insights just on companies that are looking to go public and information on those businesses and the details behind some of their offerings. And Renaissance Capital actually has
that's an excellent site that I've used.
Yeah, before, it actually has they actually have an IPO ETF for companies that have come public recently.
Everybody's got an ETF.
Yeah, it's true, including the Motley Fool.
All the cool kids are doing it.
Yeah, so I would say Renaissance Capital provides a lot of insights on just the market in general.